Hi, everybody, and welcome to UFile's Facebook event. My name is Ida Celli. I will be your co-host. So we are here to answer your tax questions. So simply underneath the video in the comments, put in your question as detailed as possible in order for us to help um, respond to you quickly. So to reply to your questions is our very own Jerry Vitaratis. Hi, Jerry. Sorry, I'm tongue-tied today.
Ida, it's only the middle of the season, all right? You're only supposed to be tired at the end of the season, okay? Let's, we gotta find the energy here, We gotta find the energy to do this. So yeah. So I mean, we're here to answer your questions, as mentioned in the caption at the bottom. So go ahead and ask in the comments, in the of the Facebook Live video. So don't hesitate. And again, we're doing this for free. We don't charge anything. We just do this as a service to all of our clients. All we ask is that you like and or follow our page, essentially, and buy our products. Essentially, that's that's the other thing why we're doing this. To show you the goodwill that we have for all of you and to try to help you in producing your tax returns. So go ahead and ask your questions, and and then what's called we're here to answer. I have to see people coming in now into the session.
Yeah, and I think they're probably answering at the wrong place, asking their questions at the wrong place. Let me take
Yeah,
a
you have
look.
to. Yeah.
Underneath the
Well, good
video.
afternoon, Sean. Yeah, underneath the video, everybody. You have to ask your question underneath the video, not at the announcement. Underneath this video is where you have to do it. All right. So I think we've got our first
Yes, we
question.
do. We have Mario.
Yeah.
Near the end of the interview steps, there are three questions posed. It's unclear to me the correct answers are when the questions asks about something that doesn't exist, such as a spouse or a dependent. For example, this question asks about a spouse, but there is no spouse. So what is the answer? If applicable, please select yes to confirm that your spouse adjusted taxable income is nil.
Okay, so Mario, more often than not, you just leave it blank. Okay, if it's not applicable to you, just leave it blank, and at that point, the program will simply ignore. And if it is required, the program's going to flag it. Very simple. When you get the review screen, it's going to flag it. And it's going to take you right back, and then you can answer the question. But usually, you just leave it blank. That's all. Blank is the answer essentially for a question that is not applicable to you.
I would just say go back to your identification and make sure you put single and not married by mistake.
Yeah. So hello, Linda.
Hi, Linda. Okay, Millie,
Yes.
why I can't see a summary of the benefits I applied for at the end of my tax return?
It depends on the benefits, Millie. So we produce estimates for the grocery rebate, formerly GST tax credit. We also produce for Canada Child Benefit as well. We have an estimate form, and usually it's not at the it might be at the bottom or it might be like in the middle of the list of pages on the tax return. So you have to actually go to the tax return tab to see what you're going to get, not in the results page. Okay, not in the summary. Okay, you have to actually go to the forms and you'll see at the estimate forms in there.
Okay, next question is for Emma. I
Mhm.
have opened up the RSP for my daughter. How do I mention it in tax filing?
Well, Emma, it depends if you put money into it or not. I mean, if you've opened an account but you haven't funded it, then there's nothing to mention. If you funded the account, then you enter in the RSP section, which is usually by default within the left-hand navigator. You're going to see it right there for the RSP contributions. Just click on it, plug it in, and then plug in the contribution that you made, the your limit that you have, and then the program will calculate. In that case, chances are you might not need it for your daughter, or your daughter doesn't need it to reduce her tax to zero. So you could also limit the RSP that you claim. There's going to be a line in the RSP page. It's going to say limit of RSP contributions to use, and you simply put zero in that amount if you don't need it.
Okay, next one is Diane.
Mm-hmm.
Hi, can you talk about the home accessibility expenses credit, please?
Disability expenses. Yes. Okay. So home accessibility is first of all non-refundable tax credit, which means that it is used to reduce your federal tax, but nothing more. Which means that if you have more credit than federal tax, you won't be reimbursed the difference. Okay, so it's just there to reduce your tax, and essentially the credit itself, what it is the claiming of renovation expenses that you incur for your home to make it more accessible to specific types of individuals. And the government narrows it down to two types of people. One, somebody who's 18 and above and eligible and considered disabled, which means they're eligible for the disability tax credit, or somebody who's 65 and above and in good health. Okay, so if either one of these individuals, there's renovation expenses in the home to make it more amenable, like for example, a new railing to enter the house, wheelchair ramp, for example, as well, or railings in the bathroom to be able to hold on in the shower. These are expenses that would be eligible for the home accessibility tax credit. Okay, and the expenses themselves are limited to $20,000. You can't go above that amount, and then you're claiming 14.5% of those expenses as a non-refundable tax credit on your return, which you use to reduce your federal tax. Now, for 2025, you could actually double dip on those expenses. You're allowed to claim them for home accessibility and for medical expenses. Okay, but for medical, it's only somebody who's disabled, not somebody who's 65 and above. Okay, so you can double dip. However, this year, 2025, will be the last year because as of 2026, the government is amending the rule, and now you will no longer be able to double dip on those expenses. So you either have to claim home accessibility or medical expenses, but not both. And usually, it's not a tough choice, it's home accessibility because medical expenses, you have to reduce it by 3% of your net income, while home accessibility, you don't. Okay, so usually that's the better one to claim. On top of the fact that you somebody who's 65 and above can claim those expenses without being disabled.
Next question is from Anna.
Mhm.
What's the best practice for using the autofill options in UFile? I use it for the first time this year and it duplicated receipts from my financial institution from both CRA and Quebec.
Yeah, so I know that happens because for some reason Quebec will rename some of the slips. We don't know why they do that, but they do. So what I would recommend is you just do the federal first. Okay, download the slips on the federal side. Download them directly. Do federal, and then try to do Quebec afterwards. Okay, and at that point, you just fill in what you need for Quebec. That way, you avoid the duplication. You're not downloading twice.
Okay, Neil,
Mhm.
more than 100,000 in American stocks. How do I record this on the return?
So Neil, you're probably subject then. So more than 100,000 depends if it's the fair market value at 100,000 or the cost is at 100,000. If the cost is at 100,000, you have to produce what's called the T1135 form, okay, which is the foreign income verification statement. Okay, so that when you get to the CRA questions in UFile, there's a question where it asks you if you have foreign assets whose cost is above $100,000 in a year. You say yes, and then the program and the navigator will add a section to produce the T1135, and then you simply answer the questions on the T1135. If you sold some of those shares during the year, then it's capital gains. Very simply, you go into the capital gains section, okay, and then you simply enter the transactions directly as capital gains.
Next one is from Nancy. My employer sent me a revised T4 after I have filed and now have
Hmm.
received my refund. How can I amend my return on UFile?
Okay, so Nancy, very simple. What you're gonna do is you're gonna make the changes to your T4, okay, as usual, and then you're gonna see in the not eFile. I've got the Pro version here, but in the NetFile page, you're gonna have something for refiling. Make sure you click the option for refiling, and then go back to the NetFile tab and just resubmit the return the way you submitted it originally. You're allowed to retransmit your return actually several times, really. But the key is, though, you have to wait for a notice of assessment. Okay, so you have to wait till the government assesses your return, and then once they assess, then you can revise. So again, you go back into your file, you what's called you change you make changes to the T4, the changes necessary that you need to make to your T4. Go back to the NetFile page, which will now have an option for refile, as it's called. You're going to say yes to it, and then you go to the NetFile tab and you retransmit the return.
Next question. Emma, she says it's not an RSP. She meant an RESP.
Our ESP. Okay, how do I file taxes with that? Okay, well you don't declare it, Emma, because the contributions you make to the RESP are not deductible. Okay, so what happens with those contributions is you put them in. They're after tax dollars, meaning that you don't get a deduction like an RRSP. Okay, and then they're allowed to accumulate tax free in the account, tax sheltered, excuse me, in the account, and you also get the grants. So for every dollar that you put in, usually the federal government will kick in another 20 cents for every dollar that you put in, up to a maximum of 5,000, up to a maximum of $500, I believe, of the grant per year. Okay, and then usually the provinces will kick in an extra amount in there as well. Okay, but as far as the return is concerned, you creating the account and putting money in does nothing to your return. The only time, because the contributions are non-deductible, unlike the RSP. Now, when your daughter finally goes to university or post-secondary educational institution and she starts withdrawing from the RESP, that's when you're going to have a slip, which will be a T4A, which will indicate the taxable portion of the amount that she's collecting from the RESP.
Emerence,
Mm.
what are the requirements for someone that just turned 19 with no work in terms of tax returns?
File. It's as simple as that. File it anyways. Even if you have no income whatsoever, at 19 you're already eligible for the grocery rebate, which is again the former GST tax credit and whatever provincial equivalent comes with it. Okay, so for example, in Ontario you got the Trillium benefit, for example. Okay, in Quebec you would have the Solidarity tax credit, for example. Okay, so just file the tax return as is with nil or zero income, and then you will collect the grocery rebate, which is a quarterly payment that will be paid to you based on the fact that you have basically no income on your return.
Okay, next one is a long one. It's Percy. I love the details. It's a little bit on the long side. Okay, you
Yeah.
file 2025 seems to have a glitch in the software. I have calculated in my income tax, but have not sent it yet due to
Mm.
what he believes is a glitch. Here
Yeah.
is the issue. The software. When I look in my federal summary under the review tab on
Hmm.
line 12700, I have a capital gain of
Yeah.
17,100. That's all fine and dandy.
Hmm.
Now, when I go to the interview tab, then click on interview setup, then go to carry forward amounts and prior year's information, uh, I then check off losses of prior years,
Yep.
carrybacks, and prior
Hmm.
year's
Hmm.
information is
Hmm.
checked off. I
Hmm.
click the blue arrow beside losses of prior years, carrybacks, which then takes me to the next page of the option. Then I
Mm.
click on the plus sign, net capital losses of the year. I
Yeah.
have losses of 20,984
Okay.
for 2024,
Hmm.
12,316 for
Yep.
2023, and 84,406
For
for
six. Okay.
2022.
Okay.
I entered these numbers in accordingly into the software and click next. Now in my federal summary line 25,300 should be should there be no, it
Mm.
should be on there, but it does not show up. My software
Okay.
is updated to version 29.11. Please help.
Okay. Okay, so it would not be 25,300. That wouldn't be the line. You should have something. I'll tell you exactly the line. 25,300 is capital gains deduction, which is not your case. You're just trying to claim losses from a previous year and apply them against your loss, your gain of the current year. So basically, let me just go here to the T1 on my other screen. I'll tell you exactly the line you should have an amount on. And the line you should have an amount. Oh no, you're right. Okay, no, it is 25 300. Sorry, I thought it's 25 400 is the capital gains deduction. Yeah, you should have something there. The only thing I would tell you, Percy, is that without seeing your file, it's very hard to determine why the program's not putting it in. Your best bet is to contact us and to send us a copy of your file. And we call it like an anonymous file, essentially where we don't see your name, we don't see your personal info, but we see your data entry. Okay, at that point, we can actually see the results of your file and see why it's doing that. So go to the help menu and go to contact support, and then you'll be able to attach your file and send it over to us. Like I said, just like that, I'm not sure why it's not doing it. It should do it. It's a very basic calculation. It should be doing it, but I don't know why it's not doing it. It could be several reasons. So my recommendation is contact our support line and send a copy of your file, which is anonymous again. We don't see your information, your personal information on it, and then we could better assess why you're not getting it. And if it's a glitch, it's a glitch, and we'll give you a workaround. Okay, we'll give you a workaround at that point.
Thanks for all the details. And by the way, there
Yeah.
should be an update in the software either today or tomorrow. I think we're going to be at 29.12.
Hmm.
Okay. So next one is Ravender. Hello. Is there a new change in taxation in Canada?
Is there a new change in taxation in Canada? Yes, the tax rate. So the first tax bracket, in this case, is being reduced from 15 to 14.5%. It's what is commonly known as the middle class tax cut, and that will be reduced further to 14% in the following year. Okay, in 2026. So that's the big change. The only other change that we have is the grocery rebate, which is basically the former GST credit, which the government is increasing by 50% for the June payment, and will be increasing by 25% the payments themselves for the next 5 years. But the eligibility is exactly the same as what it was for the GST. You just have to file a tax return, and the government will determine it. Those are the bigger changes. Now, if you have a business, you do have some big changes there, specifically for depreciation. You've got accelerated investment incentive, which has been reestablished, where you could triple the first year depreciation rate of any asset, of any depreciable asset you buy and you use your business in the first year. And you're also allowed to claim 100% depreciation on certain other assets, like, for example, manufacturing and processing equipment or computers. Okay, so that's another example for businesses, but that's about it. Offhand, after that, it's pretty minor changes after that.
Okay, next question is from Maya.
Mhm.
Can you have multiple files open? Can you prepare multiple family members together?
It depends. If it's in the same family unit, then yes, you will have all these people as members of your family. So, for example, two spouses and their children will be together. But if you are filing other family members that are not in the same household, then no, you have to do them one at a time. You can't open several occurrences of UFile and be producing several of them at the same time. So you would have to be producing one at a time.
Okay, next question is from Gabby.
Hmm.
Good afternoon. If I have contributions on RSP on March 2nd, sometimes it shows up on T4 for same year, sometimes it does not. Does not matter in which year we claim it. Thank you.
No, it does matter because well, it depends on March 2nd because this year the deadline was March 3rd, wasn't it? This year for RSPs, the first 60-day deadline. It was no, it was March 2nd actually. No,
Today was
okay, so
March 2nd.
March, yeah, it was March 2nd. Okay, for this year. So March 2nd means that you have to declare them in the previous year. So that means if you contributed in the first 60 days of 2026. So if you contributed something March 2nd, 2026, you declared in your 2025 return. And then you have the choice of deducting it or not. But the key is that you have to declare it in the previous year. Too many people make that mistake where they say, "Well, I'm in 2026, so I'm not gonna declare them, and I'm just gonna declare them next year." Problem is, the government will not accept them because you did not declare them in the previous year, because the contributions you declare for the current year is from March 2nd of the previous year till March 1st or 2nd this year of the current year. Okay, so that's the contribution period. That's what you have to declare on the return. Okay, so the key is if you contributed March 2nd this year, you declare them on your 2025 return, and then you could choose whether you want to deduct them or not. It's up to you.
Okay, next question is from Jen L. Stevens.
Mhm.
My son, who is 15, took refing courses. Can I claim that?
Depends on the province you're in. It could be considered sporting activities. Some provinces have that credit, some provinces don't. Quebec has it for a 15-year-old. I don't know if Ontario still has it. I know Saskatchewan had it as well. It depends on your province. So you'd have to check to see, depending on the province that you're in, whether you can claim these or not. But it's not every province, and definitely not federal. Federal no longer has the sporting activities tax credit.
Okay, next one is JE. Sorry, I'm not sure how to
Yeah,
pronounce that one, so we'll say JE.
I think
Could
it's
you
Jen.
please?
I think, yeah.
Well, it's probably Jen or.
Hmm.
Okay, could you please advise on what documents are required for a graduate student on scholarships who also work occasionally as a research assistant to apply for taxes?
Could you please, what documents are required for a graduate student on scholarship? Well, you're still a student, so you would need, well, normally you're supposed to get a T4A with that scholarship income. That's what's supposed to happen. And as a research assistant, you're supposed to also get either T4 or maybe a T4A, which indicates a supplemental amount, which indicates basically your consultation fees or whatever it is. Okay, but ordinarily you would get a T4A with that amount, so that's what you would
Tuition
need.
fees?
Maybe, yes, but it's yeah, you would have a T2202, that's for sure, because you're a graduate student, you're not postgraduate, right? So a postgraduate scholarship, unfortunately, is not exempt; it's fully taxable. Same thing with research grants; they're usually taxable. But graduate student on scholarship, the scholarship would be T4A, and make sure you got your T2202 because if you're a full time student as a graduate student, you are entitled to the scholarship exemption, which means that the scholarship income will not be taxed at all. You won't even see it in your total income either. But you have to make sure to enter the months of full time or part time studies in the program so that UFile properly determines whether you're eligible for that. Okay.
Okay. Next question is from Ted.
Mhm.
Will my T slips from Questrade be downloaded to UFile from the CRA when I start my taxes?
Should be. Should be. If you, I'm assuming it's basically RSP contribution slips. In this case, I'm myself. I'm a Questrade customer myself, and yes, they should be there. Yeah, I've seen mine. I've seen mine from there. So you should have your RSP contribution slips in there. They should be there.
Next question is from Neil. My daughter worked in US and just filed her American W-2. How
Yeah.
does she fill out her Canadian return?
So what you need to do is well, the W two is the actual T4 slip, right? If my memory serves me, that's what the W two is. So you would take, you would declare it as foreign employment income. So you would add the foreign income section in UFile, and then choose foreign employment income, and then you would just plug in the W two there. Whatever taxes she paid, ordinarily normally the taxes you declare for the foreign tax credit should be from a tax return that she produces in the U.S., not necessarily from the withholdings on the W 2. Ordinarily, she should be filing a return there. Okay. And whatever tax she paid on that W 2 in the US, you declare it as foreign tax paid for the purposes of the foreign tax credit. That's how you would do it. So, foreign income is where you would go.
Okay, next question from Sean. Can you explain how to enter box 135 on the T5013 slip? I have two BMU and USA. I
Okay.
have
Let me have
two
a look at
BMU and USA. Sorry.
yeah, let me have a look at the slip itself because I don't remember. There's so many box numbers on that T5013. It's just astounding.
Yeah.
Um, so wait, okay, I need the guide. Hold on. So let me just double check here. T5013 guide. So 135. No, instructions. No, it's the instructions I need. Okay, so I go here, and you said 135, which would be foreign dividend and interest, multi jurisdictional. Okay, so for that one, oops, I left it here. Okay, so for the 135, I have two BMU and USA. Yeah, I think the program only allows you to enter one bucks 135 at a time. I don't think it allows you to enter multiple. What you can do in that case is foreign dividends. So at worst, you can enter in the foreign income section. You can just go there, enter one in the T5013, and then enter the second one in whatever enter one portion. Although I think, wait, sorry, I'm just gonna have a look at the slip itself at our entry because maybe we allow two entries. I don't believe so though. Um, just give me 1 second here. Just gonna add it and have a look at the 135. Let me just show it on the screen while we're at it. We're gonna hide Ida. Sorry, Ida. And we're just gonna share my screen. Okay, so let's go here. And right on cue, froze on me. Okay, here we go. So 135 would be right there, foreign dividend income. And yeah, it doesn't give you the option for the multiple countries. Okay, so yeah, you would have to enter it either through a separate T5013 in order to distinguish the countries, or enter it in foreign income. Just take out that 135 and enter it directly as foreign income twice, for each country. Okay, so show ID again. Okay, and go here. All right, and Ida's back. Okay,
Okay, so now we're at Linda.
yeah.
When you carry forward previous year and the amounts are different from notice of assessment, where do you make the adjustments in the current year?
Linda, depends what needs adjusting. So, for example, if your RSP limit needs adjusting, you go into the RSP section. If your capital losses carry forward needs adjusting, you go to the capital loss carry forward section. So, it really depends on what needs adjusting. There's no one page where you could go into UFile and just alter every single one of these amounts. It all depends on what type of amount you need to alter. So, again, what needs to be altered, and when you figure that out, you simply go to that particular section and make the change directly there.
Next one is Lorraine. Are we able to forward returns from TurboTax to UFile?
I believe so.
We did in the past. I'm not sure it's.
Yeah, I'm
I'm
not
not
sure it's
sure
still
we
there
can
anymore.
still
Huh?
do that.
Yeah, I'm looking at it now. Yeah, it doesn't look like no, because we used to have an option where you could choose it, but it doesn't look like it's there. Yeah, unfortunately, no, there's no way right now to do it from the looks of it, from what I could see. Okay. So give me one second here. All right, so let's keep going.
So, Philippe, my charitable donation reduced my
Okay.
federal tax to zero. I also have carry forward donations
Mhm.
from past years. UFile commented that in some cases I can force UFile to claim more of my available donation to reduce my provincial tax to zero. I clicked on the suggested link, but it says you cannot add any more pages to this type. How can I claim my donation to reduce my provincial tax?
Okay, that's a very good question. Let me go ahead. Let's go back into UFile. One second. All right, I'm going to hide you for 2 seconds. I'm going to show this. All right, so when I go back to the interview, if we go to donations, just give me 1 second here. It's just a little bit slow. It is the system. Okay, so let's go here. Let's add donations. So you're going to go back. Usually, you're going to go back to the same donation section or page that you entered already. So you go. So let's add the donation section here. So I'll click over here, and when you go there, let's go to charitable donations. No, there's nothing there. So I guess it would be the optimization. So let's go here and optimization. Yeah. Okay. So hold on. If I go to Canadian Chair, okay. So I'm just going to enter my first amount there, add another. Okay. There's nothing here. Okay. The only other place I could think of is in the optimization of donations. You will go there and simply click here and choose claim specified amount and then just plug in your amount. Okay. So even though it says families donations, you're basically forcing the program to, what's called the to claim more essentially. All right, so let's bring Ida back and let's keep going.
Alma. Okay,
Mm,
my 26-year-old son has opened and contributed to an RSP account the past 2 years. In my CRA, it shows that his contributions have been unapplied. How does he have to treat this in new file 2025 submission?
Okay, you enter it as a carry forward amount in the RSP. So again, if I go back to the program, okay, if I go back here, let me just see something here. No, that doesn't work. Okay, so hold on, let's go back. Let's go back here. Sorry, I thought maybe I could keep you on the screen, but it doesn't look like it. So just show everybody we're doing this live, So it really shows it. So if I go to RSP contributions and limits, okay, so so you've got unused contributions from prior years. You see under the RSP here, you've got unused contribution from prior years. You plug the amount there. Okay, whatever was not used in this case. Okay, so all right, let's hide this. Let's bring back Ida. All right.
Okay. Next question is from Joe. How does UFile support its
Yeah.
users in a CRA dispute?
It depends if you file, if the CRA is claiming that we made a mistake. When there isn't a mistake, what we would do essentially send you an email with our justification. Okay. So basically, what we would do is if you are being contested by the CRA, so for example, it was a calculation of the software, you submit it to the CRA and the CRA refuses it, you come back to us. We will provide you with the legal article that indicates why we've done the calculations that we've done. But beyond that, we don't go further than that. Like we don't actually, represent you to the CRA and fight the CRA directly. What we will do though is that we will justify our calculations, and we will provide you with the legal articles that prove that our calculation is correct. You could take that with you and contest with the CRA. That's what we do.
Next question is from Elizabeth.
Mhm.
Where can I find the disability tax credit form? Also, Manitoba has a recreation tax credit. Where do I find that?
Okay, so disability tax rate, that's a good question. I'm not sure UFile has that directly. Let me double check. No, it doesn't look like we have it. We don't have the certificate form. The T2201, which is the certificate form, we don't have. We don't produce it. We produce the credit, which is off of which is calculated in the worksheet on the tax return itself. We don't actually produce the T2201, which is the disability tax. Usually it'll be within whatever required age it is. Then what the program will do, then what the program will do is it'll add you a section called sports and recreation. Okay, in the navigator, there's nowhere to take it. It'll simply add it for you. You click on it and then you just plug in your amount. That's how you would add the Manitoba recreational tax credit.
Next one is Lara. My partner and I moved in together
Mm-hmm.
end of November last year for the first time together. Do we mark
Yeah.
this year as common law or do we wait
Yes.
for the 2026 tax year where we are already common law?
You wait for 2026. You have to cross over 12 months. Okay, that's the rule. Okay, so the moment you moved in together and you're in a conjugal relationship, you have to wait the 12-month period. Okay, once you cross over the 12 months, then you are officially common law. So for 2025, you declare yourselves as single, and then next year you will have a status change. So you will declare it to UFile that you have a change of status, and you will declare yourselves common law as of that point.
Next question is from Kelly. Why is
Mhm.
there now a new question if you sold a property? How does this affect your taxes?
So it's not a new question. It's an existing. It's been around for a couple of years now. That's a principal residence question, and the reason why we ask it is because even though when you sell your principal residence, it is ordinarily tax exempt, you don't pay any tax on the capital gains you make on selling your personal residence. You still have to declare the transaction on a specific form, and then designate the property as your principal residence on a specific form, which is the T2091, okay, or T2091. All right. If you fail to declare it, even though you have no tax to pay, there will be penalties involved. And that's why we want to make sure that you don't pay penalties. So that's why the program in the CRA questions asks you right away, did you sell your principal residence during the year? And when you say yes, then the program's going to add the capital gains section to make sure that you declare the transaction, even though the tax owing will be zero. Okay, because there will be penalties involved if you don't declare the sale of your principal residence.
Okay, next question is from Lydia.
Mm-hmm.
Where do I find paid interest expenses or line 22-100 federal and line 231
31.
provincial in new file forms?
Yeah. Okay. So Linda, watch my screen. I'll go ahead and share it. So when you go to the investment income, so when you're in interest and investment income and carrying charges, whatever this section is here, you will see a line called carrying charges and interest expenses. You see right there. So where you entered your investment income, you go back to that section, and below you're going to have a line for expenses, carrying charges or interest expenses. You click on the plus sign and you enter your carrying charges or investment expenses. All right, and Ida's back. Whoop. We're gonna sandwich the program. Okay.
Okay, next question is Amanda.
Mm-hmm.
2025 file as an immigrant left Canada on January 1st, 2025.
Okay.
The T1161 and the T1243 generated
Generated
with a
with a
capital
capital
loss.
loss. Okay.
The due amount have not changed after the calculation of the deemed disposition on the T1243.
Yeah.
When tap on tax return tab and view my completed 2025
Yeah.
tax, I can't find any mentioning of the departure date. Where is it?
Tax.
In
Departure tax.
departure tax, sorry.
Yeah.
Where is it? In case of capital gains, will I see departure tax due everywhere? Uh,
Yeah.
Anywhere? How would I
Yeah.
know how much of the departure tax I have to pay?
Okay, so based on the information you just wrote there, you don't have a departure tax because the departure tax is generated by the deemed disposition of the assets that you have before that you still keep in Canada before you leave the country. So since you have a capital loss in your case, there is no departure tax because in your case, the deemed disposition triggered losses and not gains. The departure tax would be charged on the gains and not on the losses. Now remember that you don't have to pay that departure tax right away. Okay. You do have the option of deferring the payment of that tax to the year where you actually sell the asset or the year that you come back to Canada. That's a T1244 form, which you can apply for in the program. Okay, directly. So in the immigrant section where you enter the date of departure, there's going to be a section there where you indicate whether you want to defer the taxation. You go there and then you indicate the portion of taxation that you want to defer, which you will get from the T1243. But based on what you provided here, you don't have a departure tax because you're at a loss. So because of that, there wouldn't be a departure tax in this case.
Next question, Justine. I
Hmm.
forgot to add capital gains from 2024. Can I refile and I
Hmm.
add it for last year? Can I also add expenses from 2024 that I forgot to
Yep.
expense last year for this year's taxes?
Okay, so the first question is yes. Okay, you can. You just simply go back to 2024, make the amendment that you need to make, and then just refile the return. Like I said, you go back into the net file page. There's going to be an option there for refile where it goes into refile mode. Choose that, and then go back to the net file tab afterwards once you've calculated the return, and then just retransmit the return. As far as the expenses that you have for 2024, you put them in the amended 2024. You can't claim them in 2025 unless it's expenses that you're allowed to carry forward from one year to the next. But if that's not the case, you have to also add those expenses in your amended 2024.
Okay, Anne,
Hmm.
when claiming advisory fees, can I claim the HST that I paid as well?
Yes, if you're self-employed, yes. You just that your cost is your total cost including HST. So you put all of it in. You put all of it in.
Alan,
Hmm.
Alan, yes. What
Yeah.
documents do I need before using UFile as a single person with employment?
Your T4. Your T4, and then any other amount that you can claim on your tax return, like for example, medical expenses, for example, donations, etc. It all depends, really. It's every person has their own situation. It's a case by case basis, but of course you need your T4. That's the minimum because you said you're employed and you're working, so you need your T4, and then. Did you contribute to your RSP? You need your RSP receipts. Did you make donations? You need donation receipts. Did you what's called did you have medical expenses during the year? You need your medical expense receipts. That's essentially what you would need.
If you have investments, T5s, T3s.
Exactly. Yeah. exactly right. Yeah.
So, quasi,
Hmm.
or where, who do I contact if I need information later on? Last time I tried to use it, my account wasn't being set up. I forgot the exact details, but it sent me on a loop last time, requiring some documents to set up the account, but requiring an account to get the documents, and I am unable to continue.
Okay,
Um,
Ida, you want to take that one?
I'm not sure if he's talking about UFile or not. Once you have all your papers to file, simply if you're using UFile online, you just open an account and start with the interview section, step by step.
Yeah.
So, and if you need assistance, you should contact the email or use the form inside the software to contact support at help@ufile.ca. So,
All right. Next.
Zoe,
Zoe, yeah? Okay.
I have T4A for $133. Do I need to still fill out the form with company name, etc., for such small amount? I'm assuming no expenses can be claimed, internet, office space, etc., for such a small amount.
I mean, yeah, you would be considered self-employed. So unfortunately, you don't need a company name. Just put your own name as your company name. You could just do that. And I mean, you still deduct expenses. You're still allowed, but yeah, you can't. You know, it has to be reasonable, of course. So you are allowed to a certain degree, but it has to be a reasonable amount. If it's home office expenses in this case, you gotta do the percentage of the square footage of your home office vis-a-vis the rest of your home. So, for example, if your square footage of your home office is 10% of your home, you're only allowed to claim 10% of those expenses.
Okay, Catherine,
Yeah.
what exactly do I claim from my health and dental amounts?
Your health would be if you got any service or anything from a recognized medical practitioner, very simply. And your dental amounts is any dental work you've done, as long as it's not cosmetic. If any dental work you've done is eligible as a medical expense on your return. And remember, though, if you were reimbursed the portion by your insurance, you're only allowed to claim the portion that was not reimbursed by your insurance, okay, as a medical expense on your tax
Emerence,
return.
is there a limit on how much can be claimed from the rent for a home business?
There's no limit, but no, there's no limit really. Like I said, when it comes to a home office, you're going to be limited by the square footage of your home office, which means that you if 10% of your home of your if your home office represents 10% of the square footage of your home, okay, then you can only claim 10% of your rent and other expenses, okay. But as far as how much rent can you claim, well, it really depends on, you just have to be accurate. How much rent did you pay, and you're claiming a percentage of that. That's essentially what you're going to
Uh, Doug, I received a
claim.
5018 for cash earnings, but I don't have a company. How do I enter it in UFile?
It's still considered business. I mean, let me look at the slip again, but I think the government's still expecting it as a business. Let me just check if maybe we could put it as other employment income, but I doubt it. Usually, contractual payments will be. Let me just see here. No, just give me one second. I just want to see the slip itself. This is giving me the summary. Oop, is everybody still there?
I'm still here.
Okay, okay. Sorry. Yeah, I thought my screen froze, so I thought I was going through that again now. So hold on. Yeah, contractual payments. I think it would still be business income. I think. Um, Individual involved because must print your primary source of business income is more than 50%. Okay, hold on. Just give me the slip. Okay, just one second. Sorry, everybody. I just want to make sure I give the right answer here. Okay, so blah blah blah. 22. The total of all amounts. Yeah, I mean, to me, it's business income. I'm sorry, it just there has to be entered as business income. basically. You have to enter as self-employment income in the software as well.
Okay.
Okay.
Next
Zoe,
question
eh?
is Zoe. Please explain Quebec shield tax.
So I'm telling you, I think I got to play 649 after this because on the French side, we got this question, what, 3 times? And I told the office about it and they were all laughing. They're like, what is this? What's going on here? So the tax shield, very simple terms what the tax shield is that when you make more income during the year, you're going to pay more tax. Okay. Essentially, that's one of the consequences of gaining more income, right? Is that you're going to pay more tax. And sometimes the more income you make, it'll jump you tax brackets, right? So, for example, you could be making income that normally would be charged in Quebec, it would be 14%. And then all of a sudden you jump to the 20% bracket, okay? Because now you make income that is more than what the income is charged on the first tax bracket. That's one of the tax consequences. The other consequence of gaining more income is that you lose some benefits as well. Okay, so for example, Canada Child Benefit, for example, a solidarity tax credit in Quebec, family allowance in Quebec, etc. Because of your income, because those amounts are based on income, okay, your because they're based on income, then your benefits will be lowered because of every dollar that you're making more. What the tax shield does is that within a certain threshold, they won't lower a certain amount of those benefits, even though you made more income. Okay, so the tax shield targets two credits specifically: the work premium and childcare expenses. So, for example, childcare expenses, you're reimbursed a percentage based on your family income. Now, if the increase of your income results in you losing a percentage mark of that reimbursement. So, for example, let's say the government reimburses 67% of your childcare expenses, but now because your income went up, they'll reimburse only 66% of your childcare expenses. The tax shield comes in and says, whoa, stop. I'm going to shield you from that 1% reduction, and I'm going to keep you at 67% reimbursement. That's what the tax shield does. Now, unfortunately, it's gone for 2026. So this year will be the last. So this tax year will be the last year that we can still use it. It's rare that you're going to use it. Very, very rare. But as of 2026, it's gone.
Okay, Sharmista. Moving expenses for employment. Question: is it deductible against both spouse income, split 50-50, or only one of the spouses, or only the spouse who got the new job?
Only the spouse who got the new job. Because that's the point, right? The criteria is you're required to move to a new place or new work location, and that's why you moved. Okay, so it can't be split amongst the spouses. Only the spouse that that has the new job will deduct those expenses. And remember, those expenses are kept at the employment income that you gained in the new job. Okay, that's the rule when it comes to moving expenses.
Sherilyn,
Mhm.
how to find out in UFile the amount that UFile has decided in pension income sharing between two spouses?
I believe the program tells you. It's going to tell you in the optimization. Well, no, there's no optimization report in. Sorry, I'm just thinking of the professional version. But you should get a schedule, like a reconciliation schedule for pension income, which gives you a big table that shows you what you're saving between the two, and that's where you're going to see how much you are splitting with your spouse. You're going to see it directly there. It's going to give you a very detailed calculation of where exactly you're saving the money by sharing your pension income. Remember, it's not rocket science, the pension income split. All it is if you've got two spouses in two different tax brackets, the program will take up to 50% of the pension income of one spouse and try to put it in the other spouse who's got the lower tax bracket. So therefore, the income gets taxed at a lower rate. That's a simple concept of what the pension income split is.
Okay, Anthony, what form should someone fill out if they work as an online self employed contractor who is paid by clients directly without any EI or
Yeah.
tax deductions? I
Uh-huh.
tutor math and my wife does graphic
Graphic
design, both
design, both
online.
online. T2125. You need to produce a business income statement where you can deduct your income and your expenses. Okay, so you're allowed to deduct expenses that you incur to run your business. Okay, so the form that both of you, I think both of you are actually self-employed from the looks of it. So both of you have to produce what's called the T2124 or T2125 or 2125. That's the form you need to produce.
Okay, Gord,
Hmm.
uh, I can some dividends on my Dash Dashka Bank
Yep.
stocks held, and I do get a year end statement showing me my dividends, withholding a fee, but I don't know where to show that under my
Hmm.
taxes. By the way, am I the only one whose sound is not working?
Well,
I
I
don't
hope the
know.
sound is working.
I hope
uh,
so.
can people confirm? Because otherwise, yeah, we're kind of talking in the void here. So Gord, you need to enter this in foreign income. So let me just show you really quick in the software. Okay, where to do that. All right. So when you're here under the interview setup section, which is, of course, the main section where you choose what's relevant to your return, under investment income and expenses, you've got a section called foreign income or foreign property. So tick that box right there, click next at the bottom of the screen, and then you should see a section called foreign income and property right here. So click on that. Okay. And in your case, you're going to choose income from foreign dividends right there. So you click on the plus sign as of that point, enter all the information, and then the tax that you paid at source, the foreign tax, you entered right here under amount of foreign tax paid, and then the program will compute the foreign tax credit. Okay, that's how it works. All right, so okay, let's bring back Ida. Let's hide over here. Here we go. All right, there's Ida. Okay.
Okay. Next question. Um, Nastenka. Sorry if I didn't say that right, but anyways, I received EI last year. I have not received the T slip. Which form should I expect?
Oops. Okay, Ida, we lost you there for a second.
Oh,
Oh
okay.
yeah, we lost you there for a
I
second.
lost
Okay,
you
go on.
instead. Okay,
Okay,
sorry. I
go
received
ahead.
EI last year. I have not received the T slip. Which form should I expect?
T4E is what you're supposed to get. You don't have to go to the.
Um, Cassie, I don't know if you're talking about the CRA account, the My account. If
Yeah,
it is that, you have to speak with them.
yeah.
Okay. Jeff. No, we did Cassie before.
Oh, we did. Okay.
Yeah. Uh, Jeff. Revenue Canada revised
Yes.
my 2024
Okay.
return due to missed T3 form.
Oops, lost you there. Okay, let's try it again.
It's funny, I see you go blank. All right. Okay, Jeff. Revenue Canada revised my my 2024 return due to missed T3 forms. To update my 2024 UFile return, would I resubmit it even though Revenue Canada already revised it on their side?
If you agree with the revision, you don't have to. No, I mean, if they've done the revision and you agree with it, don't do it. There's no point. There's no point refiling. But if you don't agree with what the way the CRA revised your return, then yes, absolutely refile it at that point so that you have the proper result.
Alan, why are there two versions of UFile Online and Premium? You
Well,
want to take
I'll
that or
let
do
you
you want me
answer
to?
that question.
All right. Okay, there's
No, no,
UFile
you're gonna take it.
Premium.
You're gonna take it.
There's UFile Premium. There's an extra expense for it. What it allows you to do is chat directly with the support team, and at the same time, when you send in your request, they're supposed to be flagged. So we're supposed to be taking care of your request first. All right.
There
So
you go.
next one.
There you go. All
It's
right.
simple as that. It allows you to chat directly with
Yep.
the support team, which is good. John, if a person I support is getting mainly has pensions and extra 4,200 in income, do they need their disability tax credit to lower the amount they owe? I am barely getting anything of their unused amounts on my taxes.
John, it depends. It depends what those amounts are. If those amounts are higher than the basic personal amount, the pension income amount, which is $2,000. The basic personal amount is 16,000. The pension income amount is 2,000, and then the disability tax credit would be what is it, 8 to 10,000. If they make more than that combined, then that person needs it, and you'd be getting either very little or you wouldn't be getting any transfer amount at all. So it depends on the income of the dependent. It really depends on that. Like I said, the way you'll know is, do they make more than 16,000 plus age amount, probably 9,000 plus 2,000 plus whatever disability tax credit is now, which I think is close to 10,000 now. If they make more than that or around that, then you're not going to get much of a disability transfer. Okay, but if they make substantially less than that, then you should be getting a disability transfer at that point.
Next question is from Jom.
Hmm.
The form T776E 24. If I
Hmm.
sold a rental property for 200,000, for example, in 2024, that I bought for 100,000
Yeah,
uh, 10 years
10
ago,
years
and
ago.
then spent 10,000 on the major
Yeah.
renovations, where do these numbers go on the form for the CCA? In line 8960, the right place to enter the 10,000 renovation, uh, or is it
Yeah.
under A, area A, class 1, column 3, cost of additions?
Cost of additions. Yeah.
In columns 5, the place to enter the 100,000 difference, proceeds of sales in 2024, is under undepreciated capital cost, the original cost of the home of 100,000. Do any of
Appreciate.
these amount above, belong in any other
Okay, so isn't
place
that
on page
Yeah. Yeah.
two?
Sorry, I lost you there. Yeah.
Sorry, 2 of 6 uh, of the form 776. Is it quite confusing?
Okay, so John, or Jom, it depends on when those 10,000 of renovations were done. You wouldn't put them as additions. They're adding them to your UCC. They're supposed to have been additions over the years. So that 10,000 should already be in your UCC normally. I doubt you did the 10,000 in the year that you sold it. I'd be very surprised that would happen. Your proceeds of disposition will be the lesser of the in the CCA table. It'll be the lesser of the disposition amount or your original cost, which in your case would be the original cost. It would be 110,000. That'll be your disposition or terminal loss. That's what you're trying to determine. You're not determining your capital gain there. All you're determining is, did you take depreciation that you have to now pay back to the government? Because if you depreciated your property over the years and deducted as an expense, and now all of a sudden you sell it at a profit, well, all that depreciation expenses that you claimed over the years, you have to include them again, lump sum on your return as income. Okay, because you made a profit on the property, the government wants their money back. Essentially, is what it is. Okay, so your proceeds disposition will actually be your cost because it's the lesser of the cost or the proceeds, which in your case will be the cost. Okay, so you might have very little to no recapture. If you didn't claim depreciation, you'll have no recapture whatsoever. And then you have to enter a separate capital gains page where you enter the capital gains transaction where your proceeds were 200, your cost was 110, and then you declare a $90,000 capital gain in that case.
Okay, next question is from Brian. The Form T5015 Box 5 partner share does not let you enter less than 1%. The default is blank. I have box in my slip as 0.000182880.
Oof, Jesus. Okay, yeah. So that's T5013, not T5015. That's T5013 in this case. You know what? I mean, it's not the most important amount. It's not going to affect the calculations usually. So just enter like 0.01%. It's not going to affect anything. It's just information. What will be declared is the actual amounts that are there, which are your share already. So there's no additional proration that will happen when you enter those amounts in the software. Okay, so it's just an information, that 0.001%. So just put in 0.001. That should do it, and then just enter your amounts, which are already prorated to your share of the partnership.
Next question is from Chuck. When
Hmm.
claiming mileage for above 80 kilometers round trip medical trip, can you claim parking?
That's a good question. Um, that's a very, very good question. Let me see. Okay, travel expenses at least 80 kilometers. Okay, yes, you can. The cost of travel expenses, including accommodations, meals, and parking, when a person needs to travel at least 80 kilometers one way from their home to get medical services. So that's directly from the guide, from the medical guide. So yeah, it's got to be 80 kilometers by the way one way. Huh? It's got to be at least 80 kilometers one way. Okay, to be able to claim those expenses.
Okay, that was check. Ravender, I tried to fill in the information directly through the CRA and Revenue Quebec. It did not work.
Was there a previous question for Mervinder? Because I'm not
I
sure
think he
what.
was trying to use autofill.
Okay.
That's what it looks like by this
Okay.
question.
Okay. Well, I'm not sure. I'm not sure, Ravinder, on that one.
Okay.
Yeah.
Angelina, how to enter a lump sum tax treaty pension?
So it's again foreign income, like I showed before. Okay. So you just go in the investment income section of the interview setup, click on foreign income, tick off the box next to foreign income. Then you're going to have an option. Then once you get to the foreign income section on the left-hand navigator, there's going to be an option for foreign pension, and then there's going to be a treaty exempt income as one of the lines. You plug in the portion of the pension income that is exempt as per the treaty. That's how you would do it.
Uh, Kevin,
Hmm.
for my dependent 17-year-old, do I need to submit anything for him? He only has EI premiums on his T4.
I would still recommend to file a return because at 17, he's getting close to the age where he will be eligible for the grocery rebate. Because remember, the grocery rebate is paid the following year. Okay, so it'll be the year that he will turn 18, right? So you want to file a return at that point. So just file it with a T4. That way, you're basically ready to go to be able to claim any benefits that he would be entitled to later on. Okay, when he turns 18.
Elizabeth,
Mhm.
I'm using UFile for the first time. Can I download into from CRA, but for all other info, do I need to enter manually?
Elizabeth, yes, you can download. You can use. We have autofill in UFile, and then for all the other info, absolutely, you can enter it manually as you choose. You don't even have to import everything that you've downloaded from the CRA. You could choose what you want to download. So there's no problem there.
Ravi, can a self-employed taxpayer deduct a premium for private health insurance as a business expense? If yes, is there anything else that he has to take into consideration? Example, taxable benefits.
If the private health insurance is paid as a capacity of you being self-employed, then yes, it would you would be able to claim it as a business expense as long as it's not for your personal thing. It's really for you as the business owner. Okay, you. All right, so we've lost Ida here. Okay, why do I get installment amount showed when my tax owed is less than 3,000? Well, if you are in a province other than Quebec, I believe the limit is 1,800, right? It's not 3,000. So at that point, I believe that you would be subject to it. If memory serves me. No, sorry, it's the opposite. I'm sorry. No, no, it's it's the opposite. I'm sorry. It's in Quebec and it's 1,800, not the other way around. Um, okay. So unfortunately, we've lost Ida. Ida, just go back if you can. Just come back. Yeah, I'm not sure. I'll be honest with you, Daniel. I think your best bet is to to send us a file, help@ufile.ca. Contact us and see why. Because yeah, ordinarily 3,000 is the limit. There you go. And Ida's back. 3,000 is the limit in this case. So I'm actually not sure. I'll be honest with you. You have to contact our support staff.
Sorry, you need to take the next one. I have to find my place back.
Okay, so it's Emma again. Can I claim medical expenses, tests, and medication incurred? No disability. Do I get any rebate if taxed? Secondly, I pay insurance, employee share for myself it doesn't reflect in the T4. However, can I still show the amounts in UFile? Yes. So amount, first of all, any medical expenses that you claim, yeah, you claim it as medical expenses very simply. You don't have to be disabled to claim medical expenses as an eligible expense for the credit. And so it's basically the medical expense tax credit that you get, which is a non-refundable tax credit. And then if you pay insurance out of your pocket, that's also an eligible medical expense. So you add it simply as a medical expense for the medical expense tax credit, just like you would for your other ones as well.
Sorry, Jerry, I still can't find my place.
Okay, no problem. I'll just continue with it. All right, so now we get to Brian. Brian, Form T5013, Box 5. Okay, yeah, okay, we spoke about that. That's fine. We answered that question. AJ, now. I do taxes for a gentleman that has been in my care for 30 years. I was able to do the fast track, which requires an ID number. I had not received the fast track, so went online. Uh, this man no longer lives with me full time, but I am his POA. I'm guessing the person who takes care of him. Although he lives elsewhere, I do use my address as I handle his money. He also comes on weekends. I called the CRA to address the issue. I need to submit proof of POA. She was to send instructions but did not. I have since received a fast track ID but unsure how to proceed. Can I use the fast track income tax? Okay, AJ, I'm not sure about the fast track that you're mentioning here. What that means, or is it a simple file maybe that the CRA has just introduced? I'm not sure what you mean by that. You could probably claim that person for the caregiver amount as long as they're related to you. In that case, but beyond that, there's not much more you could do there. All right, so now we go to Christine. Christine, where do I enter Alberta Seniors Benefit, non-taxable? Could not find in last year's when filing UFile. I believe the seniors benefit isn't that a payment that you collect basically by simply filing the tax return, if memory serves me. Let me just double check again. Alberta seniors benefit. I'm just going to check what it is. Get financial assistance to help with their monthly living expenses. Eligibility, be 65. Meet the financial criteria. Yeah, so basically, it's a benefit that's paid directly to the person. So there's no, I mean, it's obviously based on the tax return because it's income tested, but there's nothing else to do from the looks of it. How to apply, read the financial booklet, apply online, request income estimate form. Yeah, I mean, there's really nothing to do on the tax return. Just file the tax return very simply. All right, I'll bring back Ida here. And now we go to Jerry. Another fellow Jerry here. Does the program maximize income splitting for the current year only? I noticed that our income splitting doesn't result in a 50% split. I guess I can override if I want more, even though it may not be optimal for this year. Yeah, Jerry, it's a year by year basis. Okay, so the program will look at your current year's return and determine whether it's worthwhile to transfer all of the 50% that you're entitled to or less than that. Okay, so usually just let the program do its thing. It usually it goes through many iterations at the same time to figure out what's the optimal transfer amount. So just let it do its thing. It'll decide for you. Okay.
I have Len as a question, but I think you're further up than me.
No, I'm defrost now. So hold on. As a
Okay.
caregiver, Quebec, what remains eligible, if any, once accepted in CHSLD? Defrost, unfortunately, there's not much that is eligible because the person is not living with you anymore. So you're not really their natural caregiver. Okay. So because of that, you really can't. Remember, CHSLD is a 24-hour care, right? So at that point, it's already been handled by the resident. So there's not much really you can claim. What you can't claim, what the person who's in the CHSLD can claim are the fees for the CHSLD as a medical expense on their tax return. But okay, here we go. Okay, for medical expenses, is it more beneficial if the spouse has the lower income claims it? I said you file, let Max back decide. How come I put the medical expenses under my wife who has the much higher income than mine? Okay, so Terry, the likely reason, without looking at your file, is the fact that you're probably not taxable, meaning that your federal tax is probably zero at the end. So even though you're the lower income spouse, return, because remember, medical expenses is a non-refundable tax credit, which means that you know, if you have more credits than tax, you're not going to get reimbursed. You're not going to get refunded the difference. That's why they're called non-refundable. So that's the reason I could think of off the top of my head that the program chose your spouse over you. To do that, all right, I moved
Is
to, I'm guessing, Northwest Territories, I'm assuming, from BC. When I import from UFile 2024, no extra options are selected. I find NT tax credits is missing. What else is missing too? There's nothing really missing. There's not a lot. Remember, NT. I'm assuming is Northwest Territories. I'm assuming is what you're putting there is what's there. North. Remember, it's a territory. There's not a lot of credits that they have that are not federal based. So at that point, you're not going to have a lot of things to claim specifically for Northwest Territories.
so next one
All
is
right,
Sophia.
Sophia. Yeah, there you go.
Okay, I earn professional self-employed employment income. Business income is positive, but online new file is not transferring the use of home expense to line 9945. What is the resolution?
Without looking at your file, it's very hard to see, Sophia. Um, I mean, your net income might be at zero. And because remember, you can't use home office expenses to either create a loss or increase a loss. So if your net income is already at zero or it's already at a loss, and I'm not talking about now your gross income, I'm talking about your net income after determining all your other expenses. If it's already at a loss, then you're not going to have home office expenses because you're not allowed to claim home office expenses to either increase a loss or create a loss. Okay, so at that point, the program will carry it forward to the future year. That's what I could think of off the top of my head. If that's not the case, then you have to contact our support staff at help@ufile.ca and ask the same question, and they'll likely ask you for a copy of your file.
Okay, Kim, how
Mhm.
to how do I determine if I qualify for the Canadian grocery expenses for tax credit? And does it show up in the U file return in specific line or on the return?
Okay, the way you determine it is that the program UFile is going to produce an estimate. So it's going to produce an estimate form in the tax return screen, which is going to show you what you would be eligible to claim as the Canada Groceries rebate. Okay, in this case, so it's purely income based. There's no other criteria to it. You just have to be a resident of Canada and have an income below the thresholds. And the moment you hit that mark, then you claim the credit. So just look at your tax return screen and look for a form that's called a grocery rebate estimate. Click on that, and that's going to tell you how much you're going to get and whether you are eligible or not.
Gerard, can I
Mhm.
submit two disability claims? Was recently diagnosed with cancer last year, and mom is 92 years old, and her disability tax credit application has no decision yet.
No, you can't claim two disability claims. You're going to amend the original, and you're going to claim both. Okay, so you're going to actually, because the form allows you to declare a multitude of disabilities. Okay, so what you do is you would amend the existing form and you would add the cancer diagnosis in there if the cancer diagnosis causes day-to-day difficulties. Remember, just being diagnosed with cancer is not going to make you eligible for disability. Okay, your disability has to prevent you from doing day-to-day activities. Okay, so at that point, you just amend the original and resubmit it. That's what you would have to do.
Margot, my husband has DTC.
Yeah.
How do I make sure that as his main caregiver, I receive my portion of the credit to reduce my taxes?
File his return with yours. So in other words, in UFile, produce both returns together as husband and wife, as a couple, and the program will transfer any excess amount that does not need. Okay, no more doing that.
Zoe, for office expenses, if I'm paying a mortgage, no rent, and my office is at home,
Oh, okay.
what amount do I claim for the office space?
For office expenses, if I
Did you
if
hear
I'm
me?
paying a mortgage, no rent, and my office is at home, what can I claim? Okay, well it depends. Are you an employee or are you self-employed? So if if you're so we lost item. self-employed, then in that case you can claim mortgage interest. Of course, you're claiming a percentage of mortgage interest. That is the percentage of your home office vis-a-vis the rest of your home. So if your home office represents 10% of the square footage of the home, you're claiming 10% of the mortgage interest. Okay, but again, you could only do this as a self-employed individual. If you are an employee, you're not allowed. Okay, an employee can only claim rent. They cannot claim mortgage interest for home office expenses. All right, I'm gonna keep going over here. We'll bring back Ida. Okay. So if I've paid foreign taxes, so this is Justin. If I've paid foreign taxes on U.S. mutual fund distributions recorded on the 1099 dividend paid various countries, if I don't claim the foreign tax credit in the U.S., no tax due in IRS, can I claim CRA federal foreign tax credit? Um, and if so, is the country to use on the form the United States or various? Okay, Justin, personally, I would just use US. It would just be too complex to try to undo, which country comes from where. The question is, were you reimbursed those foreign taxes on the US return? Okay, that's the question. If you were reimbursed, then there's no foreign taxes to declare on the Canadian return. But if you were not reimbursed your foreign taxes on the U.S. return, then then the withholdings at source is what you're going to claim for the foreign tax credit. Okay, that's what you're going to claim as foreign taxes paid for those dividends. All
Is the
right,
next one Jen?
I've got Mary before. Mary
Okay, Mayor
Snyder.
Snyder.
Yeah.
Okay,
Okay,
net
so
capital
yeah,
loss.
go ahead.
Go ahead. Net capital losses on final year return are more than needed for federal tax owed, but I'm not able to limit the amount for of the deduction. Have tried just says full amount of the net capital
Net
losses
capital
of other
losses of
years
other years
available.
available. Okay, so final return are more than needed federal tax owed, but I'm not able to limit. I think you can limit. I'll show you. Try this, Mary. I'm going to show it now on the screen. So when you go to the section, let me just add the section for losses from the previous years. Okay, and it's right here. Losses of prior years, carrybacks. So when you go to the losses section and you go to the net capital losses of other years. Okay, you've got your losses right there, and at the bottom there should be limit of deductible capital losses applied this year. Try to limit them there. If not, then there's really no other way to limit them. But I'm pretty sure this will work. Limit of the deductible expense. So at the bottom of the list of net capital losses that you have from the previous years, just go at the bottom right here, and you've got limit of deductible capital losses. Plug in your amount there. All right, so I'm going to hide this and I'm going to bring Ida back to the stream.
Jen, we already answered the question about the refing
Yeah,
courses.
yeah,
Uh,
yep.
Brian,
hmm
Brian, are deductions for seniors for around house care worth it?
Are deductions for seniors for around the house care worth it? Well, I mean, it's not deductions. You're going to claim it as medical expenses. If you have attendant care, what the government calls attendant care, then you're allowed to claim them as expenses. Whoa, I'm really small here. All right, so let me go back. There we go. And I'm like a footnote, at the bottom. So in this case, you would claim them as medical expenses. So yeah, they're worth it because they're usually a lot. No, you're spending. Here we go. Okay,
Okay, we'll take a
so
couple of more since we are way past
we're
time and
way past the time. Yeah,
we're having some technical difficulties now. So,
yeah, yeah, yeah.
Christine, what is the grocery rebate and who qualifies?
So the grocery rebate is essentially the old GST credit. Who qualifies is any resident of Canada who is 18 and above. You're a couple, it's usually around 55 to 56,000 combined and below. If you go above it, you can still probably claim it, but you're going to be claiming a reduced amount. And all you have to do is file your tax return to apply for the grocery rebate. There's no special form that you need to produce.
Did you take Nastenka?
No,
I have contributed to my son's education
no.
fund.
Okay, I lost Ida there. Okay, I've contributed to my son's education plans for many years, but I did not declare them before. Do I have to declare them now? How do I do it? You have to amend the previous years, Nastenka. You have to amend the previous year's returns to declare the amounts and then either claim them in those years or carry them forward to future here. So, Alan, what documents do I need for you? Oh, no, I already did that. Okay. So, Alan, I've done. So now Brenda. Yeah. So Ida, you're back.
Okay.
Are bathroom renovations involving conversions of a bathtub to walk-in shower eligible for home accessibility? Installation of universal 19-inch toilet? Yes, Brenda. Both of them would usually be eligible for the home accessibility tax credit.
So we'll take a last one
All
here,
right.
where it's a two-part,
Which one are
and
you reading?
we'll stop it
Yeah,
there.
and
Se
then we'll answer you
Ebuka.
directly in the chat. Okay, we'll answer your questions. Yeah. Hmm.
Okay, one. I recently moved to within 40 kilometers of my work about 2 years ago. Am I still eligible to claim that refund? How can I claim money spent on daycare? Are there any exclusive exceptions to qualify for this claim?
Okay, so first question is yes, Ibuka, but you would have to amend your previous year's return to claim the moving expenses. Okay, because you can only claim it in the year you make the move. Okay, you can't claim them 2 years later after you've made the move, but you would be eligible and you would have to amend that previous year's return. Okay, for the second question, you claim them as childcare expenses. So you create a file for your dependent linked to yours. Okay, and you enter the childcare expenses directly there. Okay, and the program will simply claim the childcare expenses directly as a deduction on your tax return or your spouse's tax return, whoever has the lower income. All right, so I think we'll end it
We'll
here.
end it here.
Yeah, and what's called we'll just answer directly in the chat. Okay, so we'll just go into the chat and we'll answer you directly there. So we apologize for the technical difficulties. We've tried to fix we've tried a lot of things to try to fix this, but unfortunately, I think we have to go back to the vendor again and see what's going on. So at that point, I want to thank everybody for attending. Just remember, this will post it. So if you want to see the answers to these questions again, we'll post this on Facebook and we'll post it also on our YouTube page. Don't hesitate to go to our YouTube page and to our website. We do a blog where we write a lot about tax topics, including the tax changes that are coming that are here for 2025 and so on. And we give how tos on the UFile on the YouTube page, how to do certain things in UFile, and also we have questions that came in. So we're going to answer you directly in the chat, in the comments. And I want to thank all of you for attending. Have
Thank you,
yourselves a
everybody.
great
Have a
day.
great day.
Thank you. All right.